traders, Caroline Alizan here, graduate student of the Grok Trade Mentoring Program. It is Tuesday, August 9th of 2011, and we are looking at the Q's daily chart. And wow, another wild day on the markets here today with the Q's up 4.82%. Oh, wow. That's incredible. And look at their chart in here. Look at the candlestick that we formed here today. What happened here during the day was that we opened a little bit higher than the close of yesterday. So we opened higher and then we pulled back down, making a new low, making a lower low, and finally at the end of the day, bulls stepped in and took control of the market and pushed the Q's all the way up, finishing the day higher. So that's what happened in here. So bulls won the day today. But what you need to pay close attention to here is that we are still making lower highs and lower lows. We never made it all the way back up to the high of yesterday, which was at the 53.12 mark. So that is significant. So we never made it all the way back up there. We made a high today of 53.08. So we are still missing that high of yesterday. So we made a lower high and a lower low, which means that we are still in a downtrend according to the candlestick formation. But we have that big bullish candlestick up here on a pretty large volume. And the MACD is getting ready to cross over, and it's pointing south, it's pointing north. So we need to watch the MACD tomorrow really closely, as well as we need to watch all areas of support and resistance that I'm going to show you here in a minute. So the first thing that you need to do tomorrow is watch that upper area of resistance right here at the 53.77 mark. So pay close attention to that. And then if we are able to break through it and then continue to the upside, you'll have to watch the 8 moving average, which is here in green. That's the green line right here coming down, which is the 8 moving average. And you really need to pay close attention to that if we ever break through the 53.77 mark, because this is significant, and really put it on your chart if you don't have it already. So this is a significant area of resistance that we are approaching. We'll be approaching if we ever break through the 53.77. So that's all areas of resistance. But if we do never go up, if we do never continue to the upside, then we could head down, we could head lower, breaking through the lower area support down below here at the 49, about the 49.70 mark, and then the next major area of support down below would be at the 48.80 mark, and the next big one would be all the way down there at the 46.95. So that's all areas of support that you really need to pay close attention to if we ever head lower. But what else do I see here on my chart? I do see a beginning of a low base formation. That's just the beginning. It doesn't mean anything to me unless we get another candlestick trading in that tight trading range at the bottom of the down leg. So that's what I'm after. That's what I'm looking for. If we do get another candlestick trading in that tight trading range right here at the bottom of the down leg, then I would call it a low base formation, and we will look at it a little bit differently. But we'll talk about it more when we see it happening, when we see it forming. So that's all that I see here on our chart. And again, whatever you see happening on the chart, you need to have confirmed with the MACD. So if we're going higher, then we need to see the MACD pointing north towards the 0 line on a pretty nice volume. That's what I'm after. That's what I'm looking for. If we had lower, I would like to see the MACD traveling south with a confirming volume. So that's what you need to pay close attention to, and that's what you need to look for. All right, so have a wonderful evening, and I'll talk to you again tomorrow.